Hey, Keith here for Am I Rich? And today I have a question for you. What is a good company to own during a recession? Now, this is a question I had asked myself, and I've seen a lot of people talk about recession stocks, and one of the big ones usually that comes out is McDonald's. People think, at least the theory goes, that McDonald's in a recession is a place that when people have less money, they're more likely to go when they're in a hurry for food. And from the outside, I kind of look at this theory as very intuitive and very possible. So this is why I thought I'd look at McDonald's stock. And so I did, but when I looked at McDonald's stock, I usually look at financials. And one thing really stood out about McDonald's, and maybe a few of its other fast food kind of peers, and that was its debt load. So I've noticed kind of a trend in debt, but for McDonald's, I kind of wondered, well, where did this debt come from? Is it something to worry about? And, what's it all about? So it kind of made me go into a history of McDonald's. And so I'm going to kind of describe the history that I found and then kind of discuss what I think this debt might mean. So basically, I think this debt problem really started back in the early 2000s. And the early 2000s, something happened that really changed McDonald's. And in the 1980s, 1990s, people loved McDonald's because, fast food, great, cheap, whatever. It was just amazing. But in the 1990s, people started doing studies on things like trans fat. And so in the early 2000s, there were a lot of advocacies for things like trans fat and others that basically started a health trend. And so in 2003, doctors finally convinced the Food and Drug Administration to put trans fat in all nutrition labels on all food. So basically making awareness of trans fat. I mean, trans fat was killing 4 times more people basically than regular saturated fat. And so it was a very big public health threat. And so that's why people started to realize some of these foods are really bad for them. I mean, they'd already had some inklings of it earlier on, but this really started to have research behind it and really started to pressure society to think different. Then you had something like in 2004, a movie came out called Super Size Me, and this really put pressure on McDonald's because that was the main focus of it, and the fast food industry as a whole. But they basically talked about, how pressure sales would they'd always ask you if you wanted to supersize your food, and then you'd get a huge portion of calories that you didn't need every time you ate a meal at McDonald's. And so people if they ate it there often, they were eating way more food than they needed to, and a lot of it might have had unbalanced nutrition, and so people could become sick by eating just too much of these foods at McDonald's. So that was a big highlight and a big negative publicity thing for McDonald's. And the trend continued. There was more and more health things coming out all the way, 2011 even. They had Wheat Belly came out, and this kind of made the gluten-free craze even stronger. And so by that time, you basically had, you couldn't have French fries at McDonald's because the trans fat was going to kill you. You didn't want to supersize your food because you're going to get fat easier. A liter of cola is way too much sugar to drink, and then you couldn't even eat the buns on a hamburger. So basically, so all these food trends really put a lot of pressure on McDonald's, and it started to show in its revenue. Its revenue growth started to slow, and by 2013, they actually had year-over-year declines in their revenue, and so this was a major warning sign for their management. So then what they did, basically by 2015, they came out with a turnaround plan, because their company, if the revenues start to slow down, what's going to happen to McDonald's? So they wanted to turn this revenue issue around, and that's why they had the turnaround plan. So by 2016, they started to implement this. The plan was basically simplify their menu, so they had less choices, get rid of things like the dollar menu maybe, improve food quality so that people would think it's a little bit healthier to eat there, and maybe tastes better. Now, they had already been playing with food before that. They had already had salads and things like that before, but that was part of their strategy. Another part was to bring in like automated robotic or kiosks. So basically you could order from a touch screen instead of ordering from a cashier, so that would reduce costs. Improve wait times in drive-thrus. And then the big one that really made an impact on their debt levels was they wanted to revitalize all the stores and kind of renovate them so that they look more modern and more inviting. And this was really the biggest cost to them. And what happened was a lot of franchise owners couldn't really afford all this, and especially for the older stores. And so they had to kind of negotiate, less fees from royalty fees from these owners, or they had to like loan them money, or if they were unprofitable, they had to like kick these people out of the franchise and then run it themselves. And so what you have now is basically a situation where they have a really big debt, and they've had to take over a lot of stores, and their new management isn't necessarily as good as an individual franchise owner, or it might be similar. So what happened, these efficiencies have basically worked to a degree. They have actually increased their profitability. And so you've seen their earnings basically stay flat or grow, which is really good for the company. But what hasn't happened is revenue hasn't increased. Revenue has continued to decrease. And so now for the franchise owners that are independent, this has basically been very flat revenue. But for the stores that they own themselves, the franchise owns themselves, they've had a very consistent decline since 2013 in their revenues. And as other franchises that are independently owned become less profitable or have less revenue, then what happens is they basically kick those people out, take over, and if they can't find a new owner that's more efficient, then McDonald's ends up withholding another franchise that is not profitable, or the revenue is not growing. So that's basically why their debt is so big. And the problem I see is if revenues continue to decline, which seems to be happening, then what you have is, even though earnings have kind of gone up or stayed flat, I think what you're going to see is a point where they cannot go up anymore just because revenues keep going down. And that's going to set off warning signs, and they're going to have troubles with creditors at that point. They might have too much debt. Now, their current plan is not to pay back the debt any faster than they have to. But if their credit rating is about to be in jeopardy, they will start to repay their debt faster. And the way they're going to do that is going to ask individual franchise owners to give them more money, more of their share of their profits, to pay for this extra debt. And so the problem I see there is franchises on the brink of good revenue or good profitability, they might slip into a point, like if revenues continue to decline even in their areas, then they might slip into a point where the franchise has to be taken over by McDonald's, which means they won't get that extra revenue from them, and so they're going to have even more debt that they need money to come from somewhere to pay for it. And then you're going to have the independent franchise owners who have good locations, and they're going to have less money for themselves, and so they might think, maybe I'm going to sell my franchise and go somewhere else, open up some Yoga and Fru's place somewhere else or something like that that's more profitable maybe. So these kind of things, they could lose talent as far as ownership goes. They could have to deal with a lot more properties that they might not be able to find good managers for, and they might not be able to withstand a credit rating change. And also interest rates could go up generally, and so they might have to pay more on these debts. So I could see that as a major problem for McDonald's. And so basically, if they can't straighten out their revenue issues, they might have to restructure their company in a significant way. That's the way I see it. I can see them, having to close down, 25%, 50% of their stores just until they only have extremely good locations with good revenue or good profitability. And these other ones, basically, they have to ditch them and somehow, just to pay off their bills. And so this is kind of a big warning sign for me, and this is kind of why I think McDonald's would be very risky. Now, as far as a recession goes, I do see a recession as probably a good thing for McDonald's, because a recession would mean that they'd have a couple more years of people, if people did go there, then people would go there when they had less money, then you would see a continuation of people or revenue staying still or maybe increasing for a little bit, and that would basically keep them afloat a little bit longer and maybe even help them kind of maintain their business. But in the long term, if they can't increase revenues naturally just without a recession, then I also see a trend, they're trying to do things online, but I see a trend where people will look at Google or Google Maps or Yelp or TripAdvisor, something like that, and try and see like what's the best fast foods restaurant near me or cheap food near me. And so there's a big trend of people just going to whatever has the higher star rating, and McDonald's usually doesn't have the highest star rating on those review apps. So I do see that as a very negative thing for McDonald's, and I do think this is one reason why I think it's a risky stock at the moment. But I'd love to know what you guys think. Do you guys think McDonald's is very safe regardless? Do you think their debt is absolutely not a problem? Do you think they can, there will be a recession and they're gonna do great? I'd love to know your thoughts on this. Feel free to leave them in the comments. Otherwise, that's kind of my opinion on McDonald's. Thanks for watching, and we'll talk to you in the next video.